Hello, everyone. Thanks for joining us on this Wednesday, and welcome to this educational presentation where today I'm going to talk to you about a strategy that I truly believe can help you survive a down market. For example, we've all seen what's happened this past month, and the market is starting to bounce a bit, but is it going to continue going higher or will it continue going lower? Well, I really think that this method is actually going to help you today, and I'll share with you actually two edges today that help construct this method. Now, before we begin, I want to start out by sharing with you what I learned trading on the floor of the stock exchange, because that's really where I started roughly 45 years ago. My trading career started on the floor of the Pacific Stock Exchange. As you see here, here's an actual picture of the floor. Now, while I was on the floor, I experienced trading through one crash, actually making markets through the crash of 1987. After I left the floor in the 90s and I started to teach and also to trade and manage other accounts, I experienced the crash of 2000, then the crash of 2008. And then if you want to call the one that we recently had in 2020 that only lasted a month or so, could be a mini crash. I traded and taught through that one as well. So I know a lot about trading when it comes to crashes. Now, I want to share with you what my mentors taught me while I was on the floor of the stock exchange. And it sticks with me to this day. And this is the theme of today's educational presentation. The market, not some guy on TV, not some convoluted indicator, not someone in the chat room, but the market, the very thing you're trading, the chart in front of you is always giving you a clue as to which direction it wants to go. See, the only difficulty is we're never taught to listen to that. We're always taught to listen to some so-called trading guru tell us what to buy or what to sell. Myself included, I was taught the same exact way 45 years ago. But trust me, once you learn how to listen to the market, which is, in my opinion, far more easy than listening to some indicator or some news announcements about earnings or some jobless claim or listening to some guy on TV, it's a lot easier to listen to the market than it is to listen to these outside sources. For example, I'm going to share with you two edges today, okay? And these are very simple, and you'll be amazed at how simple and easy they are, but how powerful they are as well. Now, as we look here, someone would say, well, this is just a range market, Steve. There's really nothing to tell. But here's how powerful these two edges are. The first edge would have identified that we're in a downtrend, just looking at this small sample size of bars here. And the second edge would have generated two sell signals. That's pretty powerful, right? Look how simple this is. As we see, there were two sell signals generated right here. By the way, this is the spiders, the ETF that represents the S&P 500. And then we all know what happened the latter part of February, okay? Now, this could have been a nice trade if you had sold the spiders or maybe bought some puts. But if you use this as a market directional tool, just to tell you what you thought the market was doing, well, comparably in the Dow would have lost nearly 3,000 points in 2 weeks based off these signals. So you see how powerful it is to learn how to listen to the market when virtually no one was telling you to get out of the market 2 weeks ago and to sell everything. But these signals were, and you're going to see how powerful they are. And on top of that, everything I'm going to be teaching you today and all the slides you'll be seeing are taken directly from our platform, the PTS Primo Charting Platform I developed with Pro Trader Strategies. This is, in our opinion, is the premier educational platform that actually teaches traders how to trade. So this is going to be a great educational presentation today. Thank you all for attending. Once again, my name is Stephen Primo. I'm the president and founder of Specialist Trading. I've been trading for 45 years now, and if there's one thing I've learned, one of the main reasons why most traders fail is because they take themselves out of the game. They basically give their power away and let someone or something else make their trading decisions for them. I was taught the same way 4 decades ago to trade this way. I listened to virtually every bit of news announcement. I looked at all the earnings reports. I watched all the so-called trading gurus on TV, and none of it really worked in terms of consistency. Unfortunately, here it is 45 years later, and traders are taught the exact same way in which to become a consistent trader. Well, trust me, that will never make you a consistent trader. The only way that I have learned how traders become consistent is by making their own trading decisions. So this is why I teamed up with Pro Trader Strategies and formulated Specialist Trading so that I could teach all of my students in now over 115 countries in every state in the United States, all the things that I've accumulated in my 45 years of trading, things mainly that I took from the trading floor to help you become a consistent trader. And you'll see that today and the attention to detail we provide for you in trying to educate you in today's class. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results in this particular strategy I'm going to be sharing with you, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember, since we are an educational company, first and foremost, all examples are strictly for educational purposes only. Now, a good way to get more education free and on a daily basis is to follow us on Twitter. There's our handle right there. I would suggest copying that down because every day I post a lot of different free information, anywhere from signals that our strategies have currently generated. And I go into a little bit of information as to why they were generated and what they're based on, as well as little bits of financial wisdom I've accumulated along the way. So lots of great free educational information. Please feel free to follow us on Twitter. Now, as I stated earlier, remember, once again, we are different from other webinars you may have attended in that our only focus is on educating you. That's really what a good mentor is supposed to do. If you've come here thinking that I'm going to tell you what I think the market's going to do, is it going to bounce and make new highs, or is it going to go lower and make new lows? Once again, you come to the wrong place. That goes entirely against our philosophy, because a good mentor teaches you how to trade, but never trades for you. Okay? You have to make your own decisions. You have to be provided with the information that has stood the test of time, but ultimately it's you who makes the decision as to where you want to buy, where you want to sell, where you want to exit, if you want to pyramid and buy more, if you want to exit at a certain level. And we provide you with all these different variables and work with you one-on-one so that you can ultimately make those decisions on your own. In my opinion, this is the only way one becomes a consistent trader. So as you see here, my goal is not to force feed you signals on a nightly basis, but simply to teach you how to trade with a specialist edge. Now, when I was struggling, my mentors who were on the floor of the stock exchange taught me the same way, the same concepts and the same philosophy of educating me. And that really has sustained me going now for 4.5 decades. So hopefully it can do the same for you. Now, before we begin, a few announcements. Please remember once again to disable all cameras and microphones. Remember, this is a Zoom presentation, but it's not an interactive one. So we don't need the cameras, we don't need the microphones enabled. This is just going to be a static PowerPoint educational presentation. We are recording this, so each and every one of you will get a link to this recording. You have to leave early, or if you have to, or if you're having, I should say, technical issues, don't worry. We will send each and every one of you a link to this so you can watch it at your own leisure. And then lastly, if you have any questions, please wait till the end to ask the questions. I have a number of slides I want to share with you, and oftentimes your question is answered on the very next slide. But if you do have a question, write it down and remember it. I promise I will get to it at the very end, okay? All right, with that stated, let's begin today's educational presentation. Remember, I want to start off by sharing with you these edges, okay? These are edges that, my mentors taught me. And here's the first edge. And once again, you'll be surprised at how simple they are. But I think by the end of this presentation, you'll see how powerful they are as well. Here's the good news. You'll be able to start applying them as soon as we conclude this presentation and see how well they work and how they could have helped you in your trading as well. All right. But I just ask that please don't use them and think they're a strategy and just jump in and start trading with them. These are simply edges that you can add to your current trading plan that I really feel will increase your odds. But you have to paper trade first, just so that you fully understand the process. Okay. Talk about simplicity. Let's talk about edge number one. If price is below the 50-period simple moving average, the overall trend is down. All right. So why is that so important? Well, it's our belief that if price is below the 50-period moving average, you should never generate a buy signal or take a buy signal. You should never, because the odds are against you. You're going to be swimming upstream. Once again, unfortunately, we're all taught the opposite. See, we're all taught to buy low and to sell high, right? And usually when we're buying at these low levels, what are we doing? We're buying below the 50-period moving average. And that's why most trades, regardless of strategy or technique, don't work out, because you're going against the overall trend. So if you want to find out what the overall trend is, all you have to do is plot a 50-period moving average and ask yourself where price is. Obviously, if price is below, the overall trend is down. So let's look at this generic chart right here. Someone looking at this would say, well, Steve, there's not really enough information. And besides that, look at this. We're kind of going down, going back up, down. There's absolutely no trend here. So I'll kind of avoid this example here. Well, someone else could say, well, no, Steve, that $5,000 course I took on the institutions say there's major support right here. This is where all the institutions are buying. So obviously the trend is up. They wouldn't buy going against the trend. Well, remember, this is the same thing I was taught 45 years ago, and they didn't work then. So what is the simplest way to find the overall trend? It's to add the 50-period moving average. Now we ask ourselves, the first question before you pull the trigger, where is price in relation to that 50-period moving average? Obviously, price is below. So what's that telling us? You automatically know in seconds that the overall trend is down. See how simple this is? You've automatically put the odds in your favor, and you've eliminated half the battles that you're going to be having. That's how simple trading can be, okay? So we know now that the overall trend is down. Now let's go to edge number 2. We talked about the overall trend. Now we have to talk about the short-term trend, right? Now, here's the fallacy that most of us have been taught. We've always been taught, well, Steve, the overall trend, that means if I'm trading a daily bar, having my signals on a daily bar, I have to see what the weekly time frame is doing, right? Or if I'm trading a 10-minute time frame, I have to see what the hourly time frame is doing, right? Or if I'm trading an hourly, I have to see what the daily time frame is doing. That way, if they're both in sync, I'll have a higher probability chance of success, right? We're all taught this in the beginning. I was taught this way. And let me just tell you one thing. In my 45 years of trading, I have found personally absolutely no consistency in applying that method or that style to trading. Absolutely none. In my opinion, this is an urban myth that all traders have been taught, that in order to trade a certain time frame, you have to find out what the higher time frame is doing, and so forth. It just has no levels of consistency for me. So this is not something we teach, all right? And this is where we talk about simplicity. You no longer have to look at 2 charts to find out what the overall time frame is doing. This is where edge number 2 comes in. Edge number 2 is simply this. When a bar closes in the bottom 25% of its range, the market, not some guy on TV, not some higher time frame, not some convoluted indicator, but the market is telling you, I want to go lower on the short term, okay? So now we have the short term in sync with the overall trend, and it's on the same chart. You don't have to overcomplicate things. In fact, overcomplicating things is one of the major reasons for traders failing. You're overcomplicating your trading. Keep it simple and you'll become consistent. Now, if you don't understand what that concept means by the bottom 25%, let's say we have a bar that looks like this, right? All you have to do is divide it into 4 separate but equal parts. And if you close in that bottom quarter, that bottom 25%, the market, once again, is telling you it wants to go lower on the short term. So now, if we see this, a bar like this, and we also see that price is below the 50, we know that the overall and the short-term trends are in sync. That's it. You do not have to have a higher time frame. You do not have to have tons of indicators, moving averages, crossing. You do not have to have some guy on TV telling you that he thinks what the trend is. It's right there in front of you. Remember, the theme of today is the market is always giving you clues as to what direction it wants to go. But we're never taught this. We're always taught to listen to someone and to give our power away and let them decide for us. Well, now you don't have to do that. It's simple. All right, so let's go back to that chart again. Once again, price is below the 50, so the overall trend is down. Now, we have a bar here that closes in the bottom 25% of its range, okay? Now, you have both in sync, and look what happened to the market, okay? This is how simple this process is. Now, these are just 2 edges, though. They are not a full-fledged strategy. But here's the good news. These 2 edges make up the preliminary rules to a strategy that I've been trading for over 45 years. So that's what we're going to be talking about today. This is strategy number 4. This is a strategy I was first taught by my mentors, and I continue to use it on a daily basis. In fact, I was using it this morning to trade prior to this presentation. So that's how much I believe in this method, and that's how strongly I feel about it. Let me give you some of the highlights of strategy number 4. It's a pattern recognition strategy. So we're not going to be relying on any fundamental news, any earnings, any announcements about jobless claims or economic indicators. We're not looking at tons and tons of different information. We're just looking for a pattern that repeats itself over and over again in any market and in any time frame. Now, this particular strategy is designed for traders looking to catch quick momentum. Now, when I first started trading this 4 decades ago, I was trading this, and getting in and out of trades on a minute-by-minute basis because I was on the trading floor, trading hundreds of times a day. But now we've developed ways in which to trade it once a week, maybe once a month, or 100 times a day if you like. And the beauty of it is oftentimes a signal will warn you in advance before it looks as if there's no momentum at all in the trade. So that's the beauty of this. And lastly, it only uses one indicator. Remember, this is a pattern recognition strategy. So we're basing it off of the pattern. But there is one indicator, and the good news is you already know what it is. It's a 50-period simple moving average, okay? Now, the advantages of trading strategy number 4 is it's extremely consistent. Now, by consistent, I know most of you think, well, wow, that means it has a lot of winning trades. No, that's not what consistency means. Consistency, as I always state, is an awareness of losses, meaning that you are aware you will have losses from time to time. And that's perfectly admissible. There's nothing wrong with losing. But a consistent strategy is one that's able to recoup a loss quicker than most other strategies would. Now, we've all been there before where we bought or started trading a method and looked great on paper or had tremendous statistics to it. And then the minute we start trading, it doesn't work at all, right? In fact, every trade is a loss, it's a loser, right? That's not a consistent method. What you want is a 2 steps forward, 1 step back approach. That's what strategy 4 is, because it's very consistent. Now, it makes you a part of the process, because once again, in the course, we teach you different ways to enter, different ways to exit, different ways to place your stop, different ways to track the trade. There's a host of different variables that we provide for our students so that you can choose the ones that make you feel the most comfortable. So everyone gets the same basic format, but then how you approach trading it is different. Someone may say, I don't like a lot of risk. I can't take a big stop placement. Okay, great. We have numerous other stop placements that are less risk. All right, you can choose from them. Or someone may say, I like to get in at a very conservative entry point. Okay, well, we have numerous conservative entry points. So someone may say, well, no, I just want to get in as quick as possible. We have ways to do that as well. Someone can also say, well, I like to get in and out and trade a lot. I don't want to hang on to the trade too long. Okay, we have ways in which to do that. Someone else could say, you know what, I want to stay in for as long as possible. We have numerous exit methods that approach the market that way. You see, everything is up to you. No 2 traders should trade alike. You still may be trading off the same setup, but how you enter or exit the trade is entirely up to you. So 2 traders may get entirely different results. And that's good, because all that matters is that you feel comfortable. You will never be a consistent trader until you feel comfortable trading the method that you have. So therefore, we provide you with all these variables so that you can feel comfortable, kind of a smorgasbord of different things to choose, or a buffet line of different variables to make you feel comfortable trading. Okay, so let's look at some recent examples, all right? These are all, once again, trades that happened most likely in the last 2 to 3 weeks. So we just want to share with you that we're not picking and choosing the great trades that happened 2 years ago. Most of these happened within the last month, some within the last few days, okay? And remember, everything you're seeing today comes directly from our platform, the PTS Primo Charting Platform. If you become a student of this course, you'll see how simple it is to apply strategy 4 on our platform. Okay, let's look at this chart here in VRSK. All right, someone looking at this would say, well, Steve, I was always taught the classic uptrend is higher highs, higher lows. And this is a textbook uptrend. So I want to be long, right? I want to buy this. Well, what's the first thing we do? We taught you those 2 edges. On our platform, it's simple. You see here in the far right-hand corner, strategy number 4, all you have to do is click on that tab, and in the drop-down menu, click on indicator. The only indicator in this strategy is the 50-period moving average, and you'll automatically see it applied. So we ask ourselves, first rule, where is price in relation to that? Price is below. So what is that telling you? What's the overall trend? The overall trend is down. Are we going to be a buyer in an overall trend? Downtrend, I should say. Absolutely no. So this is a selling opportunity. You want to sell as the price is rising, right? But we have to add a little bit more structure. So let's see if the short-term trend is in sync, all right? Well, we have here a couple of bars that close in the bottom 25%. Okay, 1, 2, 3, and we're below. So the market is basically telling us it wants to go lower, but it hasn't gone lower yet. Now, the last thing is you want to look for this pattern, though. You need the other requirements to be met as well. You just can't have those two edges. You need the remaining requirements of this 4-rule strategy. Now, we teach you how to identify this, and we want you on your own to ultimately be able to look at a chart and see that there's a strategy for buy or sell signal generated. But until then, while you're learning the process, the best way to check your work is to go on our platform. Once again, click on strategy 4. And if you think you saw some sell signals, here's how to check. Click on signal arrows. And you were right. There were 2 sell signals right here on these particular days. So this was in the beginning to coming up to the mid-February, just not even, a month ago. This was in VRSK. And look what happened. Stock fell 23 points. Now, what happened to that classic uptrend? What happened to that textbook uptrend, right? Remember, you will have higher level of consistency if you use these 2 edges that I taught you today. Here's another example, ADSK, all right? This looks like a directionless market, right? In fact, trader would say, this is a sideways market, Steve. I was always taught to stay away from these markets because you just get whipsawed. Well, this is why most traders fail, because they don't really know how to listen to the market. What's the market telling us? Well, we apply edge number 1. Click on strategy 4. In the drop-down menu, click on indicator. And the market is telling us that the overall trend is down. Now, sure, we may be going sideways for right now, but we're going sideways in an overall downward trending market. So we don't want to be a buyer at all. Now, we want to look and identify bars that close in the bottom 25%. Okay, and we see a few here. So that's telling us, okay, many of these may be strategy number 4 setups, but we have to also have the other requirements of that pattern. So we think we see some setups here to check our work. Click on strategy 4, click on signal arrows, and we were right. There were 2 sell signals right here in the beginning week or so of February. Once again, you could have taken any of these and potentially captured 30 points coming into last week. See how simple this is? Now, here's a perfect example of why most traders fail, especially with candlesticks. A student could look at this and say, well, Steve, I took that $10,000 course in candlesticks, and look at this. There's a bullish engulfing pattern right here. That is one of the most, as the name implies, bullish patterns you'll find in candlesticks, and you can't go against that. That's a reversal pattern. So I don't know, Steve, I want to be a buyer here. Isn't the market telling me that it wants to go higher looking at this candlestick pattern? Well, that's not what we rely on first. We always want to find the overall trend, because no matter what candlestick pattern, no matter what strategy, what system, if you're out of sync with the overall and the short-term trend, the odds are against you. It doesn't matter how good a pattern or a system is. If you're out of sync with the overall trend, you are swimming upstream. So why fight it? Why not go with it? So let's see what the overall trend is. The overall trend is down. So even though you have a very bullish candlestick pattern, it is below the overall trend. So the market is stronger than any pattern. So I would not take this, okay? Now, once again, rely on what the market's telling us. Well, we're looking for bars that close in the bottom 25%. I see a couple right here. And we want to add the remaining requirements of strategy number 4 in the pattern. And we see that we click on strategy 4, and we have 2 sell signals. These 2 bars met the requirements. So where you may have been going long based off of candlestick pattern, you're going against the grain. And had you taken the strategy 4 signals, you could have captured 35 points, potentially. Now, do you see how powerful this is? That's why we don't rely on any systematic trading or any kind of conventional wisdom that you've been taught in the past, because usually it doesn't work. It's a lot simpler, and in my opinion, more successful if you listen to the market as opposed to an outside source. Let's look at this example here in ZS. All right. Obviously, this has been going straight up. Every day closes higher than the previous day. All right. So that's very bullish. Okay. But once again, if we think we're in an uptrend, that's just an uptrend looking at a small data source. So let's look at what the overall trend is. Well, the overall trend is actually down. Now, sure, we have one bar that closes above, But that's not enough. As you can see here, we closed above, all the other bars were below, but we closed above. Now, here's a rule of thumb. You need at least 3 to 5 bars to close above to tell you that the overall trend is up. Or if we've been higher and start to go lower, you need at least 3 to 5 bars to close below the 50-period moving average to tell you that the overall trend is down. Because oftentimes you'll see it close above for 1 bar and then go right back down, okay? Now remember, just because it's above or below does not give you permission to buy or sell at the market. That's not what this is used for. It's just telling you what the overall trend is. You don't make a decision just that based off that information. We need to add structure. Now, the second part of the structure is edge number 2. You see right here, we closed in the bottom 25%. Now, the last 2 remaining requirements have to be met, though, in order for this to become a valid signal. I can't divulge that. It wouldn't be fair to all the people around the world that have purchased this course, but just let me tell you that this was an actual valid sell signal. This happened in mid-February, a couple of weeks ago. The stock fell 65 points coming into last week. This is happening all the time. Now, provided we go into a strong market, most people lose everything because they don't know how to change and shift with the market environment. You know, everyone's a genius, it's always said, when the market's going up, because everything works really simple and really easy when the market goes up. But what happens when the market changes its energy? What happens when the environment changes to the downside? Most strategies or systems don't work, right? In fact, I always say this, but in 2008, I was teaching for a company and I was also trading their systems. And they had tremendous back-tested results going back 10, 20 years, phenomenal results, 80, 90% winning rate. But when 2008 hit, guess what? All these tremendous systems that I was trading for the company lost everything. I don't mean they went into a small drawdown loss. No, they lost everything in the account. So that's why I don't rely on systematic behavior or back-testing results, because when the market changes its energy, anything can happen. Therefore, you will be more consistent if you make your decisions based on what the market's telling you, as opposed to trying to fight it because you want to stick to the statistics. Here's an example in BLK, BlackRock. Once again, we are below the 50-period moving average. We have a number of bars that closed in the bottom 25%. And guess what? They all, or just about all of them, met the requirements for a strategy number 4 sell signals. You had 4 chances to go short this stock before it dropped 190 points, okay, coming into the end of last month. Here's an example in Netflix. Once again, we are below the 50-period moving average. We have 3 sell signals. They all closed in the bottom 25%. They all met the remaining requirements of the method. And this was coming into January, just a few months ago, 250 points. Now, obviously, when this stock gapped down right here, there was some negative news or some negative information that came out. But isn't it funny? This is where traders usually find out that, wow, okay, I guess I should be going short here. Look at this thing. It looks terrible. But look at how the market was telling us weeks in advance to exit or to go short. Now, I want to show you some older charts of different markets in different time frames, because I know I focused a lot on stocks, but I know we have a lot of traders here that trade multiple markets, currency pairs, futures, cryptos. So let me share with you some older charts showing you some strategy for examples in downward trending markets. And the same principles apply. We're below the 50 on a 10 or 30-minute E-mini futures chart. Here are 2 sell signals, and in less than 24 hours, you could have captured 70 points potentially. That's $3,500 per contract. Same thing applies to a 4-hour chart of Bitcoin, okay? Closing the bottom 25% here and here. We're below the 50-period moving average, and 13,000 points to the downside after those signals were generated. Or lastly, here's a weekly chart of Peloton. Okay, now there's been some terrible news. I've been told, I don't look at news, so I really don't know the details, but there's been some terrible news lately in Peloton about its product. Well, looking at a weekly chart, totally different time frame, we see here that the 50-period moving average, here's our close below. Now, this is a more advanced type of selling because we didn't close there for a number of bars. We were only closed for 1 bar. So this is for more advanced traders. But if you missed that, guess what? You could have taken this sell signal. So potentially either signal, you would have had a nice winner. Had you take the more aggressive one, that's 85 points. But either way, look at edge number 1, was giving you fair warning back in August of a year ago to exit this stock. Why? Because the overall trend was down. You didn't have to look at any earnings reports. You didn't have to look at any analysts tell you what they thought of the company. You didn't have to really go over the details of the inner workings of this company and see what the progress was going to be. Right here, the market told you everything. On a weekly time frame, it was saying, get out right here when the market was selling roughly about 110, 105. Okay, let's recap what we taught and shared with you today. Remember, always apply edge number one, the 50-period moving average. If you're trading intraday charts, apply a 50-period moving average of that time frame. If you're trading weekly charts, apply a 50-period moving average of weekly bars. But always have it there, and remember, ask yourself, where is price in relation to that 50-period moving average? If price is below, the overall trend is down. It's that simple. But in order to find the short-term trend, to get in sync with that, look for a bar that closes in either the top or bottom 25% of its range. If price is below in a downtrend, you want to see a bar close in the bottom 25% of its range. That will put you in sync with the overall trend, because the short-term trend is telling you it wants to go lower, and accompanied with price below the 50, you have the overall and the short-term in sync. There's absolutely no need to look at two different time frames. There's no need to have two different charts open. It's silly. It's a waste of time, in my opinion, and an urban myth. There's no consistency to that. So don't waste your time. And lastly, these are two of the edges that make up, in my opinion, the most consistent strategy we have at Specialist Trading. That's strategy number 4, strategy I use on a daily basis. And accompany that, when you apply it with the PTS Primo Charting Platform, it's like having your own personal mentor sit there next to you, because everything is explained and shown right there for you on the platform. We developed it and designed it that way to be simple so that you could learn how to trade, and it can make it extremely simple for you. Okay, so as we conclude, strategy number 4 can be applied to virtually any market, any time frame, and any direction. Remember what my mentors taught me. The market, not some guy on TV, not some earnings report or jobless claim or economic report, not some convoluted indicator that you purchased and you have no idea what it's based on, but the market, the very thing you're looking at on a daily basis, is always giving you a clue as to which direction it wants to go. And trust me, it is so much easier and simpler . Are you still there? Can you hear me? Hi, I'm back. Can you hear me? I'm sorry, we had a little bit of technical difficulty there, and I apologize for that. If at all possible, if you could go to your chat box and type in just yes or no, if you're able to see and hear the screen clearly, and then I'll continue the rest of the presentation. I think we lost power there, so that's why we just came back, and I just want to make sure you're all able to see and hear me clearly. So let's just pause for a couple of seconds. I see some people are saying yes already. I want to give some more people a chance to come back in. So let's just pause for a couple of seconds, and I'll tell you about a great offer we have and a great way to become a strategy number 4 student of mine. So once again, if you can go to the chat box, just type in yes or no if you're able to see and hear me clearly, and then we'll continue. Okay, it looks like a number of you are able to come back. So great. I know we lost a few people here, but that's okay. We'll be able to send you this video out as it's still being recorded. Let me just continue. Remember, as I shared with you all these things I was just talking about today, please remember that the basis of strategy number 4 is in its simplicity. We just shared with you 2 of the 4 rules, edge number 1 and edge number 2. Okay, can you hear me now again? Okay, I'm sorry, we just heard that recording in progress. We just shared with you 2 of the edges that make up strategy number 4. Now, these are extremely simple, but you saw how powerful they are. So ask yourself, do you think that this strategy number 4, can help your trading in a down market? Now remember, we're only saying a down market because the current conditions meet those requirements. We are below currently, if you look at the Dow, below the 50-period moving average. But when we change and go back up, whoever, whenever that will be, whoever knows when that's going to happen, no one knows. But when we ultimately do go back, you can still apply strategy number 4. I just don't want you to believe and think that this only works for down markets. It works just as well, if not better, in up markets. So ask yourself, do you think this method can help your trading in either a down or an up market? I think you'll give a resounding yes. So here's a great offer we have for all of you taking time to view this presentation today and having to deal with all the power outages and shorts we have for a second here. This is our most consistent strategy offer. We're going to offer you strategy number 1. You're going to get instant course access, detailed instruction. And remember, we didn't talk about exact entry points, exit points, or stop placement. That's all taught within the course. So you'll get all of that information. Remember, it's like a buffet for you to choose from for all the different things that make you feel comfortable. You'll get the complete course rules that can be applied to any market, any time frame, as well as educational correspondence. But we're also going to throw in an extra bonus. All right, we're going to throw in the PTS Primo Charts free for 6 months. That's a nearly $900 value. You're going to get our platform free for 6 months. Now, you're not only going to get strategy number 4, you'll also get our enhanced buy sell line. That's the 50-period moving average, but different ways to apply it, 4 different features to apply it. A strength of trend tool that has an uncanny ability to tell you if the trend is still strong or not. You'll get our auto-generated exit levels. This is just one of our different exit methods that is automatically generated on the platform. Over 90 of the most prominent technical indicators, as well as personalized tech support. But here's the best thing I think about the platform. You're also going to get a signal scanner. This means that you can scan on a nightly basis and virtually dozens of different markets for strategy number 4 signals. So there's no need in doing what I had to do some 4 decades ago, where you had to look through 1,000 charts a night to see where the signals were. This can be done all in less than a minute. For example, here's how simple it is. Remember, on the strategy number 4 tab on our platform, all you had to do is click on the indicator or signals. Well, if you go down the line, click on scanner, and this page will appear on our platform. Choose from which symbols you're interested in: NASDAQ, ETFs, cryptos, currency pairs, futures, Asian markets, European markets, S&P 500, anything you want, and it automatically appears in less than 30 seconds. Then click on scan. It's that simple. And in about 30 seconds, you'll see a series of either green or red horizontal bars. The green bars mean there's a buy signal in the corresponding stock. The red bars means there's a sell signal. Now, let's go back to the beginning of today's presentation. If you recall, I shared with you a chart in the spiders. Now, you could have scanned for those 2 signals in the spiders, one on the 3rd and another one on the 10th. They were both sell signals, okay? You could have taken either one, and how you enter is up to you. You could have chosen any of our different entry points, any of our different stop placements, and you could have entered any way you wanted. You could have bought puts. You could have actually shorted the stock, which would be difficult. It's a very high-priced stock, or maybe just had some type of spread to the downside. Either way, you would have known that there were sell signals generated in the ETF that represents the S&P 500. And look what happened just a couple of weeks ago. Spiders fell 35 points, which was comparable to a nearly 3,000 point loss in the Dow. Now, this is something that just happened in 2 or 3 weeks that you could have taken advantage of if you were already a student of mine and a member of the strategy number 4 course. So let's break down what it costs to become a member and a student of mine in the course. Now, strategy number 4 is complete value usually costs $695, along with the 6 months of the platform is $882. So coupled together, it's normally $1577. We're going to discount that today. Remember, we're slashing the PTS Primo Charting value. So all we're going to do is charge you $695. You're going to save $882. That's nearly 60% value and discount. That's a great offer for a strategy that I've been trading for over 4 decades that I continue to use to this day. $695. Think of all the examples I just shared with you and how well they did in this down market. Do you think you would have been able to come up and pay for the price of the program? No one knows, but you just saw how lucky you could have been taking these signals if you were already a student. Remember, you should be in charge of your trading, not someone else. And by someone else, I don't mean a broker, but I mean someone that you rely on to give you signals, such as a signal service that you go online to, or some blog you read to find out what they like or don't like, or some chat room that you go to on a daily basis, or listen to the guys on TV and find out what they think of the market. You owe it to yourself to make take your trading to the next level, to make your own trading decisions and to take charge of your trading destiny. So take advantage of this great offer. Here's how to take advantage of that $695 offer. Contact Pro Trader Strategies, my sister site. They're in charge of all the tech support for the platform, data services, as well as the discounts for any of our courses. I would highly suggest calling them 310-598-6677. They're the ones that can take your order over the phone. They can actually answer any questions about pricing as well. If you're interested in having more than one method at a time, they can help you and discount your prices. So they're very flexible. I would suggest calling them up. Now, that link you see at the very bottom is the link that will take you to the sign up page. And all you have to do is copy and paste that onto your browser, and you'll be able to go there. But if you actually look, yeah, I just saw in the chat box, a live link was posted on the chat box. So all you have to do is go there and you will automatically see the light link and click that on, and it can take you to the info and sign up page. Okay. Now, as we close here, remember I said I would answer any questions. Unfortunately, I cannot answer the question of why we lost power because I don't know that myself, but I apologize for that. That happens from time to time. Hasn't happened in a while, but unfortunately, it happened today. The good news is we were able to come back on, and I could show you this great offer and this great promotion we have. So if you do have questions concerning Strategy 4, anything I share with you today, please go to your chat box, type in the question, and I'd be happy to answer it. Someone's asking, what if you already have the platform or strategy number 4? Well, as I said, Pro Trader Strategies is extremely flexible. They will be more than happy if you'd like to add something on or provide you with some other option because they know you're a valued customer. So I would just give them a call. If there's no obligation. If you're interested in also acquiring something else because you're a valued customer, they'd be happy to work with you. And there's no obligation, so there's nothing to risk. You can just give them a call at 310-598-6677. Okay. And don't be afraid to call. I'm sure you've already talked to them if you're already a customer and you know how helpful they are and how much they're willing to work with you. Okay. Can strategy number 4 work intraday? Yes, it can. Now, I showed some intraday charts on other markets like the futures as well as I believe it was Bitcoin. But if you're an intraday stock trader, sure. I mean, we have tons of students who trade strategy 4 on an intraday basis with stocks. So a day like today, if you're trading a stock, when we went down and then started to rally, I'm sure there were a number of great setups because of the momentum in the market today. So I don't know if the market, when I started this presentation, the market was headed higher, but who knows? For all I know, the market is now headed lower, but it doesn't matter. Strategy 4 will generate signals as well in up markets. Okay, that was our next question. So yes, this can be also used for up markets as well. Okay, good questions. Any more? Well, you still have it. Okay, if not, remember, there's absolutely no obligation. They will be willing to work with you. So I highly recommend calling Pro Trader Strategies 310-598-6677. And there's no obligation. They'd be happy to answer any question concerning price as well. And there's that link that's posted on the chat box for you to click on. As we close, I want to just take one last look at our disclaimer. Remember, we are first and foremost an educational company, so I hope you learned something today. But more importantly, I really look forward to all of you becoming students of mine in the Strategy Number 4 course. Thank you so much for attending. I hope to see you in class. Bye-bye.